Hi everybody, Jared Fein here. The date is October 1st, 2012. 2 weeks after officially launching QE3, Bernanke is catching a lot of heat from all sides due to the timing, the size of the stimulus, and more specifically, the targeting of the housing market. The Fed stated that they're going to keep interest rates near zero throughout 2015, as well as purchase $40 billion worth of mortgage-backed securities every month until he sees improvement in the employment rate. This continued philosophy of printing money, leading to job growth, is utterly unbelievable after a tremendous failure of QE1 and QE2 doing anything except causing inflation. I mean, if printing money creates jobs, why does anybody work? All this stimulus is doing, it takes money from the productive sectors of the economy and propping up the unproductive parts, the exact same parts the market showed in 2008, which were deemed risky and worthless. The timing of QE3 is also highly suspect, as well, with the Dow being up 12% and S&P up 14% this year, and with less than 2 months between the elections of Obama and Romney. Bernanke's defense to the nature of QE3 was to increase the time period of low interest rates well into 2015, as well as to buy mortgage-backed securities to prop up the housing market, and also to lower the cost of the government borrowing. This is just plain ludicrous. The fact that the Fed's only idea on how to fuel the zombie economy is by lowering interest rates even further to zero and propping up the housing markets to spur the economy is just plain stupid. That's how the economy collapsed in 2008 by the artificial housing boom. The very fact that they had a meeting, came up with this idea to fuel the housing bubble, to spur the economy, and everyone agreeing to it, well, that just plain shows how pathetic they are. I have no idea how they're taken credible or even not just plain out laughed at anywhere they go. Bernanke also stated with lowering the interest rates, the U.S. government would have an easier time paying off the debt. The government has no plans of paying off the debt, let alone decrease government spending. The only thing keeping them from borrowing and spending even more money is higher interest rates. Higher interest rates would be forcing the government to cut spending. You could definitely expect the U.S. government to borrow even more well into 2013 as well as 2014. The fact that Bernanke says lowering interest rates will get Americans to borrow and spend to spur the economy, but will keep the government in check from doing the same, just shows the ignorance he has. If he actually lived on the same planet as everyone else, he'd find out with all this liquidity, the banks are finally being frugal and cautious with their loans, hoarding the very same money that he's printing, which is fueling inflation. And the fact that Americans don't want to borrow and spend anymore. They borrowed and spend it, and they're up to their noses in debt, and they're trying to deleverage. This is why there is no growth. All this money printed is fueling more financial bubbles and financial assets, the housing bubble specifically, but most importantly, the U.S. government bubble. Just take a look at the Treasury prices. They're literally through the roof. Who really expects them to pay off these debt? It's a huge Ponzi scheme, and I can't wait to see when the Fed tries to unload their balance sheet. Who the hell is going to buy all this worthless debt? The Fed doesn't understand that low interest rates, spending, and debt consumption fueled this bubble in the first place. The market tried to correct itself in 2008 by bringing these inflated home prices and inflated financial assets back to reality. But the Fed and the U.S. government wouldn't allow this to happen. They wouldn't allow for the correction. They misdiagnosed the market drop as the disease instead of the cure to our ailing debt consumption-based economy. What Bernanke and Congress are doing, in effect, are removing a sick patient's white blood cells during the fever. Instead of letting the patient get better through the fever, they're kicking it down the road, which is going to turn into something much, much worse. I'm continually overall bearish of the U.S. dollar, as well as any U.S. domestic stocks. However, in this phase of the economy, I'm very wary to get into the buying or selling of any specific assets. I'm continually long precious gold and silver, as well as the commodities markets, the Aussie dollar, the Canadian dollar, and the Swiss franc. I wouldn't short any U.S. domestic stocks just yet due to the insane amount of money printing and inflation coming our way. But when inflation really kicks off in the next few years, get ready for some huge drop in the equity and commodity markets when the Fed is faced to raise interest rates in the face of insane inflation. It's going to be 2008 all over again, except this time on steroids. Well, take care, everybody.